Have you ever wondered how Bitcoin mining works and whether it is really possible to make a profit from it? If yes, you are in the right place. In this video, we will take you behind the cameras of this complex process, revealing the secrets behind mining and, most importantly, whether it is still worth investing in this market. Stay tuned, because the answers you seek may surprise you. Get ready for Oliver to help you uncover what's behind the blocks, discover how the technology can generate profits, and understand the challenges and opportunities that Bitcoin mining offers in the current scenario. Are you ready to dive head first into this universe? Let's go! When we hear about Bitcoin mining, the first image that comes to mind may be that of people digging in search of gold, and interestingly, the idea is not that far off, except that, instead of pickaxes and caves, we're talking about powerful computers and complex codes. Bitcoin mining is the process responsible for keeping the network running in a secure and decentralized way. But how does this actually happen in practice? It all starts with transactions. Whenever someone sends Bitcoin to someone else, that transaction needs to be validated to ensure it is not a scam, such as an attempt to spend the same Bitcoin twice, for example. That's where miners come in. They are responsible for verifying and recording these transactions on the blockchain, which works like a large public ledger, where everything that happens on the network is recorded in a transparent and immutable way. Now, the process itself is a little more technical. Miners use super powerful computers to solve extremely complex mathematical problems. These equations are not solved for nothing. They serve to protect the network. When a miner manages to solve one of these challenges, he confirms a block of transactions and adds that block to the blockchain. As a reward for all this effort, the miner receives an amount of newly created Bitcoin, in addition to the transaction fees paid by users. It's as if he was paid for keeping the network running and secure. The most interesting thing about all this is that this competition to solve calculations is essential for Bitcoin to be decentralized. There is no central bank controlling the network. There are thousands of miners spread across the world, competing to validate transactions. This prevents anyone from having full control over the system. Over time, the mining process itself becomes more difficult. This happens because of a mechanism programmed into Bitcoin called halving, which halves miners' rewards every 4 years or so. This makes Bitcoin even more scarce, which in theory, helps its value increase over time. So, at the end of the day, miners are an essential part of the network. Without them, Bitcoin would not work. They maintain security, validate transactions, and ensure that the network continues to be decentralized, without needing a government or financial institution controlling everything. It's an ingenious system that transforms energy and computing power into digital security and global trust. Bitcoin's mining mechanism may seem complicated at first glance, but deep down, it works quite logically. To understand this, imagine that the Bitcoin network is like a large digital ledger, where all transactions need to be recorded clearly and securely. Now, to ensure that no one can defraud this book, like trying to erase a record or spend the same Bitcoin twice, there is a super rigorous validation process, and that's where blocks come into play. The blocks are like pages in this giant book. Each block contains a set of transactions that need to be verified and approved before being added to the blockchain. But this validation does not happen automatically. It relies on a mathematical challenge that needs to be solved by miners using what we call proof of work, or proof of work, in Portuguese. And here begins the real magic behind Bitcoin. The proof of work, it works like a competition. When a new block of transactions is created, miners begin competing to see who can solve a specific mathematical problem first. And it's not a simple problem. It requires an absurd amount of computing power. The solution to this problem involves finding a specific number, called hash, which is generated by an algorithm. Now, what exactly is a hash? Basically, a hash is like a unique fingerprint of a set of data. It transforms any information, be it a Bitcoin transaction or plain text, into a fixed sequence of numbers and letters. The important detail is that any small change in the data generates a completely different hash. This makes hashes perfect for ensuring security because if someone tries to modify a transaction, the hash will completely change, signaling that something is wrong. So, returning to the mining challenge, the miner's job is to find a hash that starts with a specific number of zeros, and that's not easy at all. They do this by trial and error, testing millions of combinations per second until they find the correct hash. When a miner finally solves the puzzle, he validates the block of transactions and adds that block to the blockchain. As a reward, you receive an amount of Bitcoin and the transaction fees associated with that block. This process is essential because it ensures that the network remains secure and decentralized. If someone wanted to try to defraud the system, They would need to redo the mining work of all previous blocks, which would require computational power that is practically impossible to achieve. It's a brilliant mechanism that combines math, cryptography, and pure computational muscle to keep Bitcoin running fairly and transparently. The question that many people ask is it still possible to profit from Bitcoin mining today? The truth is, yes, it is still possible, but the scenario has changed a lot since the early days of Bitcoin. In the beginning, anyone with a common computer could mine and get a good return. Today, the story is different. Mining has become a gigantic industry, with specialized companies, cutting-edge equipment, and a level of competition that requires much more than just connecting a PC at home and waiting for profits to appear. The first point that matters a lot for anyone who wants to start mining is the initial cost. To have a real chance of competing, you will need specific equipment, known as ASIC, Application-Specific Integrated Circuit. These devices are machines created exclusively to mine Bitcoin and are absurdly more efficient than any common computer or video card. And we're not talking about a small investment. A good ASIC can cost between $2,000 and $10,000, depending on the model and processing capacity. Not to mention the need for an adequate cooling system, as these machines generate a lot of heat and need to run 24 hours a day. But the cost of the hardware is just the beginning. Electricity has become the true villain of mining. This is because the mining process consumes a huge amount of electricity. Imagine having powerful equipment running all day, every day, searching for that mathematical solution that validates Bitcoin blocks. In countries where the cost of electricity is high, such as Brazil, domestic mining can quickly become unviable. This is why many professional mining operations are set up in places where energy is cheaper, such as Iceland, China, in some regions, or the United States, in states that offer energy incentives. In addition to energy and equipment, there is the cost of maintenance. Machines need to be cleaned regularly, may require parts replacement, and of course, need to operate in ventilated environments to avoid overheating. And we can't forget the internet. A stable, high-speed connection is essential to ensure that transactions are recorded at the right time and there are no missed opportunities. If you like the content and want more tips on how to dominate the world of Bitcoin, don't forget to leave a like. By clicking this like, you help us grow, as well as ensuring that YouTube notifies you whenever we have hot news for you. Don't miss this chance to be part of our community of crypto lovers. Come on, show your support and always stay one step ahead. Now, regarding return on investment, the answer depends on several factors. The price of Bitcoin, the cost of energy, the efficiency of the equipment, and even the mining difficulty, which increases over time. When more miners are competing on the network, the harder it becomes to find a valid block, and this difficulty automatically adjusts to keep issuing new blocks at an average interval of 10 minutes. If you can set up an operation in a place with cheap energy and state-of-the-art equipment, payback can come in a few months or years, depending on market conditions. But if costs are too high, profits may never come, especially if Bitcoin's price drops or energy costs soar. It's a game of risk, and nowadays mining looks much more like a business operation than a hobby for enthusiasts. Therefore, for those just starting out, it may be more interesting to consider other ways of investing in Bitcoin, such as buying and holding, the famous HODL, or even exploring alternatives such as participating in mining pools, where several miners come together to share profits and reduce risks. In the end, making a profit from mining in 2025 is not impossible, but it is certainly not as simple as it once was. You need to do the math very carefully, understand the risks, and be prepared for a game that requires patience, investment, and a good strategy. When we talk about the best equipment for mining Bitcoin, the first thing that comes to many people's minds is whether you can start with your home computer. After all, back in the beginning, that's exactly how it worked. All you needed was a simple CPU, and anyone could mine directly from their PC. But times have changed, and competition has become so intense that using a CPU nowadays to mine Bitcoin is practically useless. The processing is nowhere near what is needed to compete with the current level of mining. Then comes the second idea. What if I use a GPU, those powerful video cards that people use to play games or do video editing? For a long time, this was a viable alternative, especially in other cryptocurrencies, such as Ethereum, which until a while ago still allowed efficient mining with GPU. They are much faster than CPUs in solving complex blockchain calculations. But, in the case of Bitcoin, this option also ended up being left behind. Today, GPU mining is no longer worth it due to the huge increase in network difficulty and fierce competition. Now, if the idea is to really get into the game and have some chance of profit, the only viable option is to invest in an ASIC, or Application-Specific Integrated Circuit. These rigs are specifically designed for Bitcoin mining. They do one thing: solve the algorithms needed to validate transactions on the blockchain. And they do it extremely efficiently. To give you an idea, an ASIC can be hundreds of times more powerful than a GPU, consuming much less energy for each calculation performed. This means it uses less electricity to do the same job, and in mining, this is crucial. But here comes the question that really matters. Is it worth investing in such professional equipment? The answer depends on several factors. The first is the initial cost. A good ASIC is not cheap. Models like the Antminer S19 Pro or the Wattsminer M30S++, they can cost between $5,000 and $10,000, depending on the supplier and demand. Additionally, you need to consider the cost of electricity. Mining Bitcoin consumes a lot of energy, and if you live in a place where the electricity bill is expensive, the profit may simply evaporate. Another important detail is the environment. A working ASIC generates a lot of heat and noise, so if you plan on mining at home, be prepared to deal with the constant sound of fans and find a way to cool the environment. Therefore, many professional operations take place in refrigerated warehouses, in countries where energy is cheap and the climate is cold, reducing refrigeration costs. Now, if the investment in an ASIC seems too high, an alternative may be to participate in a mining pool. In this model, you join other miners and share processing power. When the group finds a block, the profits are divided proportionally to each participant's effort. It is a way to reduce risks and guarantee more constant gains, even if smaller. In the end, investing in professional equipment is only worth it if you are really willing to set up a serious operation, with good cost planning, a suitable location, and a clear strategy to face market fluctuations. Bitcoin mining in 2025 is no longer a hobby for the curious. It is a true business game that requires investment, patience, and, of course, a good dose of strategy to turn this idea into real profit. When we talk about Bitcoin mining, many people imagine that they just need to buy the equipment, turn it on, and start counting the profits. But in practice, the goal is much lower. This is a game full of challenges and risks, both technical and financial. And anyone who enters without preparing could end up spending more than they earn. One of the first points that you need to consider, and that many people forget, is the legality. Bitcoin mining is not permitted in all countries. In places like China, for example, the activity has already been banned due to the enormous energy consumption and the risks of economic decentralization. On the other hand, in countries like the United States, Canada, or even Paraguay, where energy is cheap and legislation is more flexible, mining is completely legal and, in some cases, even encouraged. Before you begin, it is essential to understand the rules in your country. Can you imagine investing heavily in equipment and then discovering that the activity is prohibited? This can turn a dream of profit into a huge loss. Now, even in countries where mining is legal, the financial risks are real and cannot be underestimated. The first challenge comes right at the beginning: the initial investment. Buying equipment like the famous ASICs can cost thousands of dollars. Additionally, you will need adequate space, a good cooling system, and a stable internet connection. And even after assembling the entire structure, there is no guarantee of an immediate return. This is because the cryptocurrency market is extremely volatile. The price of Bitcoin can rise quickly, but it can also plummet from one day to the next, and this directly affects the profitability of mining. Another risk is in technical challenges. Keeping a mining operation running is not as simple as it seems. Equipment requires constant maintenance, can overheat, and, if not well looked after, can even burn. Furthermore, if the electrical grid in your region is unstable, power outages can cause damage to hardware and interrupt its operation, which generates direct losses. And of course, you can't talk about mining without touching on the subject of energy consumption. This is, without a doubt, one of the biggest challenges. Mining machines need to run 24 hours a day, solving complex calculations that require an absurd amount of electricity. In countries where energy costs are high, this factor can be decisive in making mining unviable. Often, the money you spend paying your electricity bill ends up outweighing the profits you generate, especially if the price of Bitcoin is falling. Are you ready to go deeper into the Bitcoin universe and learn everything about this revolution? Subscribe to the channel now. By signing up, you will always be up to date on the latest trends and opportunities in the world of crypto. It's time to be part of a community that keeps growing. Let's go on this journey together. Furthermore, the constant increase in mining difficulty is another obstacle. The Bitcoin network was designed to automatically adjust difficulty every 2016 blocks mined, on average every 2 weeks. This means that as more miners join the network, it becomes more difficult to find a new block and, consequently, more expensive and time-consuming to obtain rewards. Ultimately, Bitcoin mining requires very careful analysis. You need to consider whether the environment in which you are operating is favorable, whether the energy costs are worth it, and whether you have the technical knowledge necessary to keep the equipment running efficiently. It is not impossible to profit from mining, but to do so, you need planning, patience and, above all, understanding that this is a risky investment, where the chances of success depend both on your preparation and on market fluctuations. If you go in with your eyes closed, you may end up discovering the hard way that mining Bitcoin is not as simple as it seems. When we think about starting to mine Bitcoin, one of the first questions that comes to mind is this really going to make a profit? And this question makes perfect sense, because mining isn't just about turning on the machine and waiting for the money to arrive in your account. It is an investment that involves many costs and risks, and understanding whether it is worth starting requires a very detailed calculation. The starting point to know if mining is profitable for you is to analyze two main factors. How much will you spend and how much can you earn? It seems simple, but in practice, it involves much more detail. First, there is the initial cost of equipment. If you're serious about mining Bitcoin, you'll need to invest in an ASIC, those devices made especially for this, and they're not cheap at all. But the cost doesn't stop there. You also need to consider electricity costs, which, depending on your region, may be the biggest factor on your budget. Mining equipment consumes a lot of energy, and if the electricity bill is high, it can end up swallowing your entire profit. Furthermore, equipment maintenance, adequate physical space, mainly because of the heat generated, and even internet costs come into this account. And here comes the big challenge. Even if everything is working perfectly, profits will still depend directly on the price of Bitcoin at the moment. If the market is down, earnings may not even cover basic costs. And here comes a factor that many people forget, but which makes a huge difference: the halving. This event takes place, on average, every 4 years and cuts the reward received by miners for each validated block by half. For example, if today the reward is 6.25 Bitcoins per block, after the next halving it will drop to 3.125. This means that, from one moment to the next, you will earn half for the same work. And the worst, the costs remain exactly the same. The good side is that, historically, halving usually generates an increase in the price of Bitcoin, as it reduces the currency's supply. But you can't count on this as a guarantee of profit. The cryptocurrency market is unpredictable and can surprise you in unexpected ways. Now, if you want to get a clearer idea of how these factors translate into actual numbers, there are several online tools that help calculate mining profitability. Sites like What to Mine or Crypto Compare allow you to enter information such as the cost of energy in your region, the current price of Bitcoin, the power of your equipment, and even the current difficulty of the network. With this data, they carry out a simulation to show whether you are on the path to profit or whether you will end up at a loss. But even with all these calculations, mining is never an exact science. Network difficulty can increase overnight, the price of Bitcoin can fall, and, if a new halving is approaching, the pressure to make a profit before rewards decrease can be even greater. So, before you dive in, the most important thing is to understand that mining is not a quick money-making scheme. It is an investment that requires planning, patience, and, above all, good financial control. If after making all the calculations and considering the risks, the account closes in the positive, then yes, it may be worth taking the next step. If not, you may want to look for other ways to get involved in the cryptocurrency market. When we talk about Bitcoin mining, the image that comes to mind is usually that of a room full of noisy machines, running non-stop and consuming an absurd amount of energy. But the truth is that not everyone needs to go through this headache to get involved in mining. There are simpler and more accessible alternatives for those who want to participate in this universe without having to spend a fortune on equipment or deal with the heavier technical aspects. One of these options is the cloud mining, or cloud mining, which basically works as a rental of processing power. Instead of buying your own equipment and worrying about maintenance or energy consumption, you pay a company that already has all the infrastructure set up. This company mines Bitcoin on your behalf and, in return, you receive a portion of the profits proportional to the investment you made. Sounds practical, right? And it really can be, especially for those who don't want, or can't, set up an operation at home. But there's an important detail. Cloud mining comes with its own risks. First, not all platforms are trustworthy, and unfortunately, this market has seen many scams and fraudulent schemes. So, before investing, it is essential to research well, check if the company has a good track record and understand exactly how the contracts work. Furthermore, profits are not guaranteed. Even if the platform is legitimate, if the price of Bitcoin drops or the mining difficulty increases, you may end up earning less than expected, or even nothing at all. Another alternative that many people consider safer and more efficient are mining pools. And look, this strategy makes a lot of sense, especially if you're starting with more modest equipment. Instead of mining alone and competing with large operations, you join a group of miners. Everyone works together to validate blocks and, when a reward is earned, it is divided proportionally between participants according to each one's contribution. This approach is interesting because it increases the chances of getting more regular rewards. Mining alone can be an almost impossible task nowadays, especially with network difficulty so high and heavy competition for miners who have real farms of machines. In a pool, even if your contribution is small, you still have a chance to earn a share of the profits more consistently. But, of course, pools also charge a fee for the service, and they are not always 100% transparent about how they distribute profits. Therefore, as with cloud mining, it is essential to choose a reliable pool and understand the terms well before joining. In the end, both cloud mining and pools are good alternatives for those who want to start mining Bitcoin without facing all the challenges of direct mining. Each option has its pros and cons, and the best choice will depend on your investor profile, how much you are willing to spend, and the level of risk you are prepared to assume. The important thing is to always do good research before investing, because in the world of cryptocurrencies, information is the most valuable asset you can have. When we talk about the future of Bitcoin mining, the first thing that comes to mind is, will this still be profitable in a few years? And that's a completely valid question because the mining landscape is changing fast, both because of technology and regulations that are emerging around the world. What seemed to be a digital gold mine a few years ago now faces much more complex challenges, and everything indicates that this trend is likely to continue. Bitcoin mining profitability has always been a roller coaster. When the price of Bitcoin skyrockets, miners profit more, even if costs remain the same. But, over time, the difficulty of the network increases, and then, even with a high price, mining becomes increasingly expensive and competitive. And there's still the halving, which happens roughly every 4 years and halves the reward received per block mined. This means that miners earn less Bitcoin for the same work, which can further squeeze the profit margin. Now, if we look to the future, technology is one of the factors that will most affect the game. New mining equipment, increasingly powerful and efficient, is emerging and will continue to evolve. This could be good news for those who have access to these high-end machines, because they consume less energy and perform much better. On the other hand, those who are unable to keep up with this evolution may be left behind, as mining with old equipment may become financially unviable. And we cannot ignore the impact of regulations. Several countries have already started to impose stricter rules on cryptocurrency mining, mainly because of energy consumption and environmental concerns. China, for example, has already completely banned mining in its territory, and other nations may follow suit. In contrast, countries like the United States and Kazakhstan have attracted miners with cheaper energy and more flexible regulations, at least for now. But the risk of new restrictions will always exist, and this could change the mining scenario from one moment to the next. Energy consumption is also an issue that will gain even more prominence in the future. Bitcoin mining requires an absurd amount of electricity, and with the world increasingly focused on sustainability, the pressure to make this activity more environmentally friendly is only going to grow. This could open up space for projects that use renewable energy sources, such as solar or wind. But, of course, this transition will not happen overnight. So, will Bitcoin mining remain profitable in the long term? The answer is, it depends. It depends on where you are, the cost of energy, the efficiency of your equipment, and, most importantly, changes in the market itself. Those who are prepared to adapt to new technologies and regulations can continue to profit, perhaps even more than today. But, for those who cannot keep up with these changes, mining could end up becoming an increasingly risky investment. Ultimately, the future of Bitcoin mining will be shaped by a combination of technological innovation, political decisions, and market behavior itself. And, as always, those who are better informed and more prepared will have the greatest chance of doing well. After all, in the world of cryptocurrencies, the only constant is change. If you want to continue diving into the world of Bitcoin and transform your knowledge, be sure to click on the video that appears here on the screen. Learn more, discover new strategies, and stay on top of everything you need to know to dominate the crypto market. Don't waste time. The next step of your journey starts now.